What are partially regulated investments? Financial expert Mr. Srinivasavardhan will explain this to you now.
We will move into alternate investment funds. There are some private equity funds and venture capitals, and there are some franchisee opportunities, all come under these alternative investments funds. So these all schemes will be decided by the person who is designing the venture capital opportunities, or the company who is sharing their franchise business to others. They have been following their own rules and regulations and the profit sharing, all that. So this purely in the business perspective, it is, we can say the investments can be a business, but still the proportionate comparatively the participation of the investor will be more in these alternate investment opportunities. So the returns, there is no proper indications and a track record, because the returns will be change business to business. Though it is all grouply considered as a venture capital or private equity or alternate investments, the profit what we are generating, it is going to be depends on that particular business and particular business opportunities. So it is not only the regulations, it is all about this investors' knowledge towards that particular sector and how they have been developing these subsequent knowledge and subsequent follow-ups procedures towards that investment that will determine their profit. So these alternate investment options, it can be a venture capital, or it can be a private equity, or it can be a franchisee business. So the investors need to have a lot of clarity in each and every procedures and process and returns, all that. So that alternate investment funds also consider as a partially regulated investments. So then the next partially regulated investment is going to be a insurance schemes. In that insurance scheme, specifically, we will take that unit linked insurance plans. These unit linked insurance plans will have four types of charges, because we commonly say ULIPs are highly chargeable like that, but there are some breakup of charges. We will get into these charges details now. The first is going to be the allocation charges. These allocation charges will be take some percentage in the initial investment itself. For example, when I invest some lakh of rupees in any ULIP scheme, it will take around 20 to 25% as a allocation charges. And initially, it was taken in a first year itself. Now, these charges has been divided into subsequent 5 years. For example, 5% into 5 years. So, 5% of your charges every year will be taken towards allocation charges. Somebody is investing a lakh of rupees, 5,000 rupees will be taken as a allocation charges. Then subsequently, the fund management charges will be applicable. The fund management charges based on this asset under management, what they have been managing under these unit linked insurance plans. So the fund management charges may be approximately 1.5% applicable in every year. That will be adjusted in the NAV irrespective of the growth of the NAV. Either the NAV is growing or not, this 1.5% will be applied in the NAV on a yearly basis, and it will be adjusted in the consecutive working days of the particular year. Then after these fund management charges, there will be an administrative cost. This administrative cost will be charged approximately some 3,000 rupees per year, which will taken by liquidating your portion of units. So the insurance company will liquidate some portion of units and take their administrative charges. So because of this liquidation in the portion of units, it will affect the overall compounding effect of the returns. So the administrative cost is going to be a additional charges, the third charges. And finally, the fourth charges is going to be a mortality charges, which will be applicable for our coverage purpose. Majority, when we invest into ULIP, we never focus on the coverage part. We always focus on the returns part. But without coverage, there will not be any insurance plan will be given. So for the sake of coverage, they will provide 5 lakhs, 10 lakhs coverage there. Whether you required or not, the charges will be applied for that. So after applying all these charges, approximately there will be around 15% of the charges will be taken out of your investments. If market supports, if market is doing well for past 3 to 5 years time, by end of 5 year, when you are eligible for liquidation, you will be getting at least your principal back. If market consistently runs some 2 3 rallies in that span of 5 years and delivered average return of 12 15% per year, then you will get back your principal by end of the fifth year. But if market is not supporting, if there is a sizable deductions and it's more volatile market, there will be 20 to 30% deduction in our principal payment itself, because many of our investors would have experienced this kind of charges and this kind of underperformance in the unit linked insurance plan. But many people, whenever they invest into any insurance scheme, they come out with a lot of information, lot of inputs, lot of calculations and projections, all that. After assessing all this information, then only we are investing into that kind of insurance scheme. But still, there is some catching points. Still there is some trap which will come to know after 3 years or after 5 years, when we are going to look into the performance of these insurance schemes. So there are long way to bring more clarity in the charges and way of fund management. And because now these even regulatory measures also, these unit linked insurance schemes are investing in stock market, but they have been predominantly following the IRDA regulations. So either how far they have been applicable into the SEBI regulation, again it is going to be questionable, because SEBI has followed a separate regulation for investing into the stock market, but IRDA is regulating the insurance schemes. Insurance schemes followed IRDA regulations or SEBI regulation in this fund management. Still, there is a long way to equip in that regulation part also. So, because of all these reasons, we say ULIPs also is partially regulated in investment options. So all these example will throw some picture how to identify unregulated investment and how to identify partially regulated investments. So there are one more unregulated investments called bitcoins, and uh, these bitcoins are still long way to get regulated. In government also is not yet allow these bitcoins in India. Finally, to conclude, whenever we get any investment opportunities, first we have to think about whether it is a unregulated investment or partially regulated investment. If it is a well regulated investment, then only we need to think about getting into such kind of investment into our portfolio.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also, you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free, and you can find the link in the below description. Please like and share, and do subscribe to Holistic Investment.